Welcome to the FTA tutorial videos on how to complete your tax return for VAT, which we will refer to as VAT return throughout this tutorial. This is the first in a series of videos which will take you through the process of completing your VAT return on the FTA e-services portal, submitting your VAT return by the deadline, and making payment of your tax liability. In this module, we'll explain how to open your VAT return and get started. It is extremely important that you submit accurate VAT returns to the FTA by the required deadline. If you fail to do so, you will incur tax assessments and penalties. All VAT returns must be submitted online using the FTA e-services portal. To access the VAT return, you should log into the e-services portal using your registered username and password. You will be presented with the dashboard screen where you can see a summary of your active tax registration with the FTA. In order to begin completing your VAT return, you will then need to click on the VAT tab on the navigation bar at the top of the screen. From this screen, you should click on the option to open your VAT return. The standard tax period is 3 calendar months. Therefore, you'll be required to file VAT returns once every 3 months as a minimum. However, in some cases, businesses may be required to file VAT returns on a monthly basis. The VAT return must be received by the FTA no later than the 28th day following the end of the tax period, and this is also the deadline for the receipt of any payment due. Where the due date for the submission of the VAT return and payment falls on a weekend or an official public holiday, the deadline is extended to the following business day. For example, if your tax period ends on the 31st of March, the VAT return and payment must be received by the FTA no later than the 28th of April. However, as the 28th of April 2018 is a Saturday, the VAT return will be due April 2018. Once you have clicked on the option to open your VAT return, you will see a number of details at the top of the screen. This includes information such as the TRN or tax registration number for the taxable person, as well as their name and address. If you are a tax agent submitting the VAT return on behalf of a taxable person, you will also see some additional details: your TAAN or Tax Agent Approval Number, your associated TAN or Tax Agency Number, and the tax agent and tax agency name. The form will automatically populate the VAT return period you are currently filing, the tax year end and VAT period reference number. The tax year end is important for businesses which are not able to recover all of their VAT and need to perform an input tax apportionment annual adjustment. This adjustment is due in the first tax period following the tax year end. So, if the VAT return period reference is 1, those affected businesses should include their input tax apportionment annual adjustment in this VAT return. You'll also be able to see your VAT return submission due date here. Please check and ensure that all of this information is correct before going any further. You've now opened the VAT return and checked that you're filing information for the correct tax period, covering VAT on sales and all other outputs. In this section, you should include the net value of supplies of goods and services you have made and the VAT due. This information should be identified by the emirate in which that supply was made. For businesses with establishments in the UAE, the supply should be reported in the Emirates where the establishment most closely connected to the supply is located. For non-established businesses, the supply should be reported in the Emirate where the supply was received by the customer. The total net value of the standard rated supplies should be reported in the amount column. Standard rated supplies are subject to VAT at 5%. This box should include the net value of the supply of goods and services subject to VAT at 5%, supplies of goods and services at a discounted rate, deposits received, sales through vending machines, supplies of commercial property, intercompany sales, supplies made to staff, the sale of business assets, deemed supplies, reimbursements of expenses from customers, the full value of goods sold under the profit margin scheme, less any VAT calculated on the margin, Sales by non-resident persons who are registered for VAT purposes in the UAE, where the importer is not responsible for the calculation and settlement of the tax. Supplies of goods located within designated zones where the goods are consumed within the designated zone. Reductions in value due to credit notes issued, or errors that you are allowed to correct for previous tax periods. This will apply where you have discovered an error where the payable tax is less than required by AED 10,000 or less, and you discovered the error in this tax period. If the tax value of the error you have discovered is more than 10,000, you should submit a voluntary disclosure in the tax period in which the error was found. But it should not include sales of goods located within designated zones which are not consumed within the designated zone, out-of-scope supplies, zero-rated supplies, or disbursements. The VAT amounts relating to the net value of sales and other outputs previously included within the amount column should be included within the VAT amount column. This is the VAT you have charged to your customers, also known as output tax on the supplies you have made. The adjustment column in this section of the VAT return is to record any adjustments made to the output tax due as a result of any claims for VAT bad debt relief or sales of commercial property where the buyer has already paid the output tax to the FTA. All amounts entered should be VAT amounts only and can only be negative amounts. Again, these should be reported for each emirate. If you are not claiming VAT bad debt relief or making a real estate adjustment, you should not include anything in the adjustment on sales and all other outputs section. After the official tourists refund scheme, the amounts reported in this box should always be negative. Box 3 requires the taxable person to declare the value of goods and services received which are subject to VAT under the reverse charge mechanism, as well as the purchase of oil and gas products that are subject to the domestic reverse charge. This includes imports of services where the customer is required to account for the VAT. Please disregard any imports of goods that have been declared to UAE customs during this tax period where the import VAT is reported separately in box 6. The only circumstance where a purchase of imported goods should be reported in this box would be where the movement was not declared via UAE customs. The value to be included in these boxes include only the net value and VAT value of the output tax due from you, as the customer, on these supplies. If you are entitled to recover the VAT on the supply as input tax, that will be recovered in box 10 of the VAT return. In box 4, the taxable person must declare the value of supplies of goods and services which are subject to VAT at 0%. This would include exports of goods and services outside the UAE, as well as local supplies such as certain educational and healthcare services. Only the net value of the supply is required to be declared in this section. If you are a taxable person which has also made supplies that are exempt from VAT, you should declare the value of exempt supplies made in box 5 of the VAT return. Examples of exempt supplies would include certain financial services which are specified as exempt under the VAT legislation, bare land, local passenger transport services, and specific supplies of residential buildings. The next section of the VAT return is headed VAT on expenses and all other inputs. This section of the VAT return is where you should declare the VAT you have paid to your suppliers on purchases, also known as input tax. Only the input tax which you are entitled to recover should be included within the VAT return. For more information regarding when you are unable to recover VAT, for example on costs incurred which relate to exempt or non-business supplies, or costs on which you are always prevented from recovering the VAT, please refer to the FTA website for further guidance. The first box in this section is box 9, and in this box you should declare the value of standard rated expenses on which you are entitled to recover the input tax. The total net value of the standard rated purchases on which you are seeking to recover VAT should be reported in the amount column. This box should include the value of goods or services purchased for business purposes from VAT-registered suppliers that were subject to VAT at 5%. Goods or services which were purchased at a discount. The total price that you have paid for goods purchased which you are selling under the profit margin scheme. Goods or services purchased before your tax registration became effective on which you are able to claim the tax incurred. The claim must be made in your first VAT return. Reductions in value due to credit notes received from suppliers and errors that you are allowed to correct for previous tax periods. This will apply where you have discovered an error where the payable tax is less than required by 10,000 dirhams or less, and you discovered the error in this tax period. If the tax value of the error you have discovered is more than 10,000 dirhams, you should submit a voluntary disclosure in the tax period in which the error was found. But it should not include wages and salaries, money put into and taken out of the business by you, purchases that were purely for private or personal use, expenses where the input tax is specifically disallowed, such as entertainment costs, motor vehicles which are available for private use, and any other costs which are put to private use, expenses which were incurred to make wholly exempt or non-business supplies, exempt or zero-rated purchases, purchases of goods located within designated zones which are not consumed in the designated zone or subsequently imported into the UAE mainland, gifts or donations of money freely given for nothing in return, purchases from members of the same tax group, fines and penalty charges received, e.g., traffic fines which were not subject to VAT. Please also note that purchases which were subject to VAT under the reverse charge mechanism should be recovered in Box 10, not Box 9. The VAT amounts relating to the net value of expenses and inputs previously included within the Amount column should be included within the Recoverable VAT Amount column. This should only include the VAT you are entitled to recover, not the total value of VAT you have incurred on all costs. For example, if you have incurred 1,000 dirhams of input tax which directly relates to the making of exempt supplies, this input tax is not recoverable by you. You should not include any amounts in your VAT return. If you incur costs which were used to make partly taxable supplies and partly exempt supplies, you should include the total net value of the cost in the Amount box and only the recoverable value of VAT in the Recoverable VAT Amount box. First of all, you need to know whether you are due to make a payment of VAT to the FTA or due to receive a repayment. If the figure in box 14 is a positive value, this is the total amount which is payable by you to the FTA. However, if the figure in box 14 is a negative value, this represents the total amount which is owed to you from the FTA. If the figure is negative and you are owed tax from the FTA, you should answer the question at box 15, do you wish to request a refund for the above amount of excess recoverable tax? If you answer no to this question, the VAT credit owing to you will remain on your account and can be carried forward to subsequent tax periods to be offset against future tax liabilities. However, if you answer yes to this question, you will be directed to complete a VAT refund application after submission of the VAT return. Upon acceptance of the request for a refund, the FTA will make a repayment of the reclaimable VAT to your account, subject to any audit checks or requests for further information it needs to make. You have now completed the main sections of the VAT return. The following sections contain some additional reporting requirements which certain taxable persons will be required to complete. The additional reporting question asks if you have applied the profit margin scheme during the tax period. If you have, you should indicate yes for this question. Otherwise, you should indicate no. You will know if you have applied the profit margin scheme for the tax period because you will have only accounted for VAT on the profit achieved on the sale of certain second-hand goods. Once you have finished filling in the VAT return form, you should tick the box next to the declaration in the Declaration and Authorised Signatory section to confirm all of the information is accurate and complete. To submit the VAT return form, carefully review all of the information entered on the form after completing the mandatory fields and confirming the declaration. Once you are certain that all of the information is correct, click on the Submit button at the bottom right-hand corner of the screen. Upon the successful submission of your VAT return, you will receive an email confirmation. Once you have submitted your VAT return, you then need to make payment of your VAT liability, if applicable.